Hello everyone. Today I'm going to discuss iRobot, ticker symbol IRBT. So the first thing I like to look about a company is look about the reasons that you want to buy a product. Now, this company actually, the end of last year, I thought it was kind of interesting. It kind of spiked my interest in knowing more about the company. So I digged into some of the research right now. So iRobot has three different products really. The Roomba vacuum cleaner, the Braava Robot Mop, and the Mira pool cleaner. Now, as far as the Roomba vacuum cleaner, it has a really great mapping and navigation technology, and that's really what differentiates it with other technologies. I think the mapping and the navigation is much better than their competitors. Also, the second thing is you can actually control it with your cell phone. So you can actually be at work and you can actually clean the floors just by pressing a few buttons. And what it will do is it will keep cleaning, and then when it gets low on the charge, it will actually go back to the docking station and then charge again and then come back out again. So all that technology is built into this product. They have a new i7 model which will actually dispose of the dust in a bag, so you don't have to mess with that at all either. So I thought that was pretty good, the technology that they're coming out with right now. They have a 62% market share in the US right now, so they're dominating all the other companies right now, which gives them a good moat. And I like their brand. And the next thing is the Braava Robot Mop. Now this one will actually spray a jet spray, and it will clean in the process. Now this was introduced back in 2016, so this is a relatively new technology that they're working on. The growth is really great right now, and we'll get into that later, but the growth is exceptional, even better than the Roomba right now. They also have a product, the Mira pool cleaner. It doesn't have a whole lot of sales right now. It's kind of introduced with the high-end crowd. So a little bit of history. Colin Angle is actually the CEO and founder, and he has a long history with the company. He's been the president starting in November of 1992, and he was the CEO starting in June of 1997. And what I read about on the internet is I really like his strategic direction of the company. I like the long-term outlook of how he thinks about the company, so that's really good. And I've listened into a bunch of videos and earnings calls, and I really like the way the company is heading. And they have many patents. They're definitely fighting off the competition of the patents. There's been a lot of patent infringement, and they want to protect their patent rights to the company. So I can tell that they're fighting and winning a lot of battles right now. And I know the CEO, Colin Angle, has really stressed that he's protecting his patent rights. They are growing international. They've got exposure to Europe and China and Asia, which is good. I like a company that has international diversification. If you look at the customer satisfaction, you'll see that they have positive reviews on Amazon and positive comments on Facebook. And I really like the way customers are liking the products. I pay a lot of attention to that. I know another company, GoPro, which is also a product company, had a lot of negative reviews and comments, and that kind of the reason why it kind of went downhill on GoPro. But I like the way this company, the positive comments that are coming out of the company. And there's also customers that are actually naming their robots, which is kind of cool too. That's a kind of cool little innovative technology that they came about with. With the balance sheet, they have total assets of $691 million. Total liabilities is $188 million. And if you take the equity, which is the assets minus the liabilities, we get $503 million. So if you look at the debt to equity ratio, you get the financial health of the company. So you take the total liabilities divided by the total equity, and you get a total of 0.37, which is a very good health. I mean, it's a very good asset to liability ratio. So I'm very happy with the balance sheet the way it is right now. So let's go on to the income statement. If you look at the sales for the past 5 years, let's start with 2014. We have $556 million. 2015, $616 million. 2016, $660 million. 2017, $883 million. 2018, we had it for the first 3 quarters, it's $707 million. So they're expecting to finish 2018 with the sales of $1.085 billion. So that's some solid sales there. If you take the average sales growth over those years from 2014 to 2018, you get a total of 19.03%. And I did not take into account that last quarter either of 2018, so that growth could have been higher than that. So that's really good sales growth. I like that about the company. So let's take a look at the gross margin percentage. 2014, we're looking at 46.3%. 2015, 46.8%. 2016, 48.3%. In 2017, we got 49%. 2018, 52.1%. And that's for the first 3 quarters. So you can tell that their performance on the cost of goods sold compared to their overall sales have been improving. So that's a good thing. Net income for 2014 is $37.8 million. In 2015, we went up to $44.1 million. 2016, we went down to $41.9 million. 2017, we went up pretty substantially, up to $50.9 million. In 2018, we went up quite a bit, $62.8 million, and that's just the first 3 quarters. So if you take the growth for the past 5 years, that's not including the last 4th quarter, you get a 16.6% growth, which is very good. I would assume it would probably be over 20% if you factor in the last quarter, but we don't know what the last quarter is going to be yet. R&D cost, this is the research and development cost. You'll see it go from $69.4 million in 2014 to $76.1 million in 2015. 2016 is $79.8 million. 2017, $113.1 million. 2018, $103.2 million for the first 3 quarters. So that's very good. They're innovating. They're adding cost to it. I like to see that in a company. PE ratio. Take the price per share divided by the earnings per share. So the $90.83 per share divided by the $2.36 per share. And that's for the last 4 quarters, is the trailing 4 quarters is what I went by. And you get a trailing PE of 38.49, which is a little high. Usually I like to see it around the 30 range. Return of assets, the net income divided by the total assets. You take the $67.4 million divided by the $657.3 million, you get the 10.25%. So that's pretty good. Return on equity of the net income divided by the total equity, you get $67.4 million divided by the $482.1 million. You get a percentage of 13.98%, which is a little lower than the 15 to 20 is what I usually like to see, but that's pretty good. And that's for the average for the last 4 quarters. In summary, iRobot had a good earnings and sales growth the past 5 years, and I truly believe that they're going to be the same in the future. Already analysts are saying over 20% revenue and earnings growth in the next 5 years. They have a good balance sheet. If ever a recession hits in the next couple of years, like it could happen, then they could get financing. The share price right now is $90.83. Their current PE is 38.49. Usually I like to see that dip below a PE of 30 before I start buying any more. So if anyone has any thoughts of iRobot, please post in the message board below. If you liked the video today, please subscribe and hit that little bell button. And just a couple disclaimers. I am a current shareholder of iRobot. This video is just for educational purposes only and not meant for investment advice. Please do your own research or hire an investment advisor. Thank you so much for watching my first investment video. See you next time.